Good morning, students. Today we will discuss the income method of estimating national income. Before going to the details of the various steps involved in calculation of national income using income method, we should have the basic knowledge with regard to what are the different factors of production, what are factor incomes, what is domestic income, and what is national income. Dear children, whenever we undertake any production process, we have to make use of the different factors of production. And all of us we know there are broadly four factors of production: land, labor, capital, and entrepreneurship. Now, when anyone renders these factor services, in return he gets some factor income. So factor income is the income earned by rendering the factor services. The factor incomes are always earned by the owners of the factors of production. When they get that income, when they render their factor services. And different factors, they have their own remuneration. For land we have rent, royalty. For labor we have wages, salaries. For capital the remuneration is interest, and for entrepreneurship the remuneration is profit. This is the basic knowledge that we know beforehand. Now, what is domestic income? Domestic income is the sum of the factor incomes earned within the domestic territory of a country in one accounting year. Within the domestic territory of the country, so many factors of production are employed to undertake production process, and whenever those factors of productions are employed, in return they get the factor incomes, and the sum of all these factor incomes earned within the domestic territory is in one accounting year is known as the domestic income. Now, coming to the national income concept, it is also the sum of the factor incomes, but here it is the sum of the factor incomes earned by the normal residents of the country in one accounting year. Now, already we have discussed what is factor income. Here let me repeat it. The income earned by the factors of production for rendering factor services are known as the factor incomes. Now let us discuss in detail what are the different factors of production and what are their corresponding factor incomes. Whenever a factor of production is employed in the production process, the producer has to pay, that is the factor payment, and that factor payment constitutes the cost of production for the producer, and the cost of production for the producer becomes the income for the owner who provides that factor of production. So broadly here we have written the factor of production will start with labor as a factor of production, and when labor is rendered, labor is provided, the remuneration that is obtained by labor is known as compensation of employees. This is the term that we use while estimating national income in income method. So for labor, the factor income is compensation of employee. Now this compensation of employee is having two heads. First one is wages and salaries. When labor is rendered, in return they are paid wages and salaries for their labor. Now these wages and salaries can be paid either in money term, either in the form of cash or in the form of kind. For example, suppose a person is employed and his salary is 60,000 per month. that is his salary in cash. And suppose that employee has got free accommodation facility, free housing facility for the job, for the labor that he is rendering. So that free housing facility is payment to that person, that is a part of compensation of employee in kind. It is not in money terms, it is in kind. Take another example. Suppose a maid is coming to your house and you are paying rupees 1000 per month. Now that rupees 1000 per month, it is a part of wages to that maid and it is paid in terms of cash. Now during the Holi, Diwali, etc., you are giving saris or something like that, and that is also a type of compensation to that labor, and that is in the form of kind. So the first component of compensation of employee, I think it is clear. The first component is wages and salaries, and this wages and salaries again can be in two forms. One is in the form of cash or in money terms, and another in the form of goods and services, and that is called in kind. Now the second component of the compensation of employees, employer's contribution to social security scheme. When a person is employed in any organization or any institution, sometimes the employer contributes something for the social security of the employee, and those contributions are known as employer's contribution to social security scheme. For example, provident fund, gratuity, all these are the payment of the employer to the employee towards the various social security schemes. Now this is, I think both the parts are clear to you people, and that is the factor income coming from labor as a factor of production. So to summarize, labor, when labor is rendered, the corresponding factor income generated is compensation of employee, and compensation of employee will have two components, wages and salaries, and employer's contribution to social security schemes. Here I would like to underline the word employer. Sometimes what happens, the employee, one who is working is the employee. The employee also contributes to different social security scheme. Suppose I, as an employee of KBS, I contribute towards my pension scheme. That is my contribution. My contribution will not be included in this compensation of employee. But if KVS is contributing for my social security, that will be a part of compensation of employees. Sometimes in the question you will get the term like employees contribution to social security scheme. They will give it only to confuse you, but employees contribution at no cost will be added, will not be included under compensation of employee, because employee contributes from his or her wages or salaries. It is already included in wages and salaries part. So what is over wages and salaries, over and above what is added is employer's contribution. So again, underline this employer's contribution. In the question you will have to see whether the component given is employer's contribution or employee's contribution. If it is employee's contribution, do not add it, do not consider it. But if it is employer's contribution, then yes, it will be added as a part of compensation of employees. So labor as a factor of production and its remuneration we have completed. Now coming to the another factor of production, that is land. For land as a factor of production, its remuneration are rent and royalty. Land as a property, if a person owns it, the property ownership of the land gives rise to the remuneration called rent, because you have land as the property and you own it. Hence, when you give your land for some production process, for some production, you get the factor income in the form of rent. And sometimes what happens, there is no, there is property ownership, but the property is given on lease. And when there is the concept of lease ownership, you are giving your land to some producer on lease for certain time period, then what you get as remuneration is known as royalty. So land as a factor of production receives the factor income in the form of rent or in the form of royalty, as the case may be. It may be due to property ownership or due to lease ownership. Now the third factor of production is capital. For capital, the factor income is interest. It is direct. Now coming to the last factor of production and the important factor of production, that is entrepreneurship, which takes the risk, which coordinates the entire production process. And because of that factor of production, the income that entrepreneurship gets is known as profit. Now profit itself again divided under three heads. Whatever profit is obtained, a part of it is paid in the form of tax, that is called corporate tax, and a part of profit constitutes the dividend or distributed profit. Out of the profit, the company or the enterprise distributes a part of it among its shareholders, and that part constitutes the dividend. And another part is the undistributed profit, otherwise also known as retained earnings. Another name for this undistributed profit is also corporate saving. Any corporation or any enterprise, it saves a part of its profit for unseen future as contingency. So that part is known as the undistributed profit. So the thing is, if we'll start from the labor component itself, while calculating the national income, if compensation of employees is given directly, then that is to be included. Sometimes in question you will find it is given compensation of employees, suppose 5,000 crores, wages and salaries 1,000 crores. At that time you need not add compensation of employees as well as wages and salaries. Here you have to be clear that wages and salaries are a part of the compensation of employees. Once you have added compensation of employees, you need not add wages and salary. You should never add wages and salaries separately, because again it will lead to double counting. So if compensation of employee is not there in the numerical, you are finding there is no component such as compensation of employee, then you search for the term wages and salaries, whether it is given or not. And at that time you have to add wages and salaries. And after finding wages and salaries, you have to search if it is given employer's contribution. If it is given, now you add both of them, wages and salaries as well as employer's contribution to social security scheme. And when you add both these, what you will get? You will get the compensation of employee. Now for land, rent and royalty, usually it is directly given. For capital, the factor income interest, it is also usually directly given. And for entrepreneurship, profit. If a profit is directly given, you simply add it. If profit is given along with that corporate tax or dividend or corporate saving, they are also given, at that case you have to add only profit, not its components. If a profit itself is not given, then you have to find what is the corporate tax, what is the amount of dividend, and what is the amount of retained earning or undistributed profit. And you have to add these three to reach at profit. And finally you have to add up all the factor incomes to find the national income, and in detail we will discuss. So these are various factors of production and their corresponding factor incomes. Now to summarize, in national income accounting under income method, there is one term used, that is called operating surplus. Now what is operating surplus? Operating surplus refers to income from property and entrepreneurship. Already this operating surplus we have discussed in the previous slide, but it is a new term, and what is it? Let us discuss over here. Now property constitutes of two parts. Two factors of production constitute property. They are land and capital. Land and capital are referred to as property, and entrepreneurship, already you know, that is the human capital part of it. So the income that we get from property are rent, royalty and interest, because property is having two parts, land and capital. From land we will get rent and royalty, from capital we will get interest. So from property as a whole, what are the incomes that we are going to get? Rent, royalty and interest. Then the second part, the income from entrepreneurship, is nothing but profit. So what is operating surplus? Operating surplus is equal to the sum of rent, royalty and interest and profit. Now let us discuss. Here it is, operating surplus is equal to, the rest part is not visible over here, you can write down. Operating surplus is equal to rent plus royalty plus interest plus profit. Now let us discuss about the various what steps we need to go through for calculation of domestic income and national income. In the first step, we will have to calculate the domestic income, and domestic income is nothing but the net domestic product at factor cost. It is net. Why it is net? Because whatever factor incomes by now we have discussed, all of them are paid in net terms. Then why domestic? While calculating the domestic income, we are taking into consideration the sum of the factor incomes which have been earned within our domestic territory. So it is domestic. Then product at factor cost. Why at factor cost? Because they are nothing but the factor payments, and factor payments are nothing but the factor cost. So to calculate this domestic income, that is net domestic product at factor cost, we have to add three components. Number one, compensation of employee, already we have discussed. Number two, operating surplus, just now we discussed in the previous slide. And the third one is mixed income of the self-employed. Already first two have been discussed. Now what is the third component? Actually what happens, if I am owning land and I am giving it on rent to someone, then my income is rent. Whatever income I get from my property ownership of the land, that is rent. And if I am rendering my labor, then I am getting my wages or my salaries. If I am acting as an entrepreneur, then I am getting profit. If I am investing my capital, I am getting interest. These are clear cut. But sometimes what happens, there are some self-employed people, and those self-employed people, they render all these factor services. If you take one example, the thing will be clear. You take for example a farmer. A farmer is having 1 acre of land. Now in the 1 acre of land, he is working by himself. His family members are also giving their labor on that land which is owned by the farmer himself. And to cultivate something, to produce the crops, the farmer himself investing his own capital, and the entire production process is again coordinated by the farmer himself. The production is undertaken by the farmer himself. He is arranging all this land, labor, capital, everything, and he is having his production. So here, if you take this farmer is a self-employed person. No one is employing him. There is no employer. And here what happens, whatever at the end of the year, whatever he gets, he sells it and he gets his income. Now the entire thing he considers as income. But here what amount out of this total income, what is his contribution from land, what he is getting from his labor, what amount he is getting from capital, and what amount he is getting from entrepreneurship. We cannot differentiate, we cannot segregate. Because suppose at the end of the year, now the farmer is having income of 5,000. Where from this 5,000 come? Will you say this 5,000 is his compensation of employee? Is his wage? Will you call it is his profit? Will you call it is his interest? No, it is combination of both. He has used his land, so the rent is included in that 5,000. He has given his labor, so the wages for his own labor is also included in that. He has taken the risk, and for that the profit is also included in that. He has invested his capital, so that interest part of his capital is also included in that. Because we cannot segregate the income of these self-employed persons, so that is considered as a separate component, and that is known as mixed income. Why it is called mixed income? Because all the factor incomes are mixed over here, and we cannot separate each factor income here. So that part, it may be the service of the advocate, the shop, the small business owners, all these things, the barber, the salesmen who are there on the street, all these things, they will be anyone who is self-employed, their income is included as the mixed income of the self-employed. So domestic income has three components. One is compensation of employee, number two operating surplus, and number three mixed income of the self-employed. Now after calculating the domestic income, the final step of estimating national income is we will have to calculate national income. National income, we know it is net national product at factor cost. Already we have calculated NDP at factor cost, net domestic product at factor cost, and from that to reach at national income or net national product at factor cost, simply we will have to add net factor income from abroad, because national income is the income earned by all the normal residents of the country in one accounting year. So here we will have to add the net factor income from abroad with the domestic income, so that we will reach at national income. So this is all about how to estimate the national income under income method. So I'll summarize over here. To calculate national income, in the first step, calculate the domestic income. And to calculate the domestic income, you will have to add three components: compensation of employees, operating surplus, and mixed income of the self-employed. If compensation of employee is given directly, you add it. If compensation of employees is not given, then add wages and salaries, both in cash and kind, and employer's contribution to social security scheme. And here compensation of employees part is over. Now if operating surplus, now coming to the second component, if operating surplus is directly given, you put that value. If operating surplus is not given directly, then you have to look for its sub-components, that is rent, royalty, interest, and profit. Adding all these components, you will get operating surplus, and then you put the value. And finally, usually mixed income of the self-employed, it is directly given. By adding all these three components, you will get net domestic product at factor cost. And if you are to calculate national income, then you will have to again add net factor income from abroad with NDP at factor cost. If net factor income from abroad is given directly, you put the value. If not, then you find out if it is given in two components, factor income from abroad and factor income to abroad, get the net value, subtract factor income to abroad from factor income from abroad, and what you get will be factor income from abroad, and then you put the value. Sometimes in the question it will not give net factor income from abroad, rather it will give net factor income to abroad, and in that case you will have to simply make it negative, so that you will get the net factor income from abroad. Suppose net, in the question it is given net factor income to abroad is equal to -50. If net factor income to abroad is minus 50, then what will be net factor income from abroad? Minus 50 is equal to 50. Or if net factor income to abroad is given 50, then net factor income from abroad will be minus 50. So putting the correct values and having the correct calculation, you will reach at national income correctly. And if sometimes under income method it may give you to calculate GDP or GNP or whatever, but the first thing you will have to reach at domestic income, or first if it is question is to calculate using income method, the first aggregate that you will have to calculate is net domestic product at factor cost. पहले इसी को calculate कर लेना, and from this concept you can reach to any other aggregate that is asked in the question. If it is GDPFC, then add depreciation. You know how to convert one aggregate to another. So the thing is first to reach at calculation of NDPFC, net domestic product at factor cost, and from that concept you reach at the any other concept that is given in the question. So this is all about the calculation of national income in income method. Thank you all.